Hi, and welcome to the first edition of Socrates Explains Everything. My name is Socrates. I like to explain things. Today we're going to be talking about how to trade the stock market, specifically the options market, but it begins with the stock market. Today we're going to be talking about candlestick charts and how to read a candlestick chart. And if you've got my book, Money is Power, Practice Makes Profits, Mastering the Stock Market, we're looking in chapter 7 called Making the Trade, approximately page 204. And we're going to discuss candlesticks, which is a way of displaying the data. Basically, you end up breaking a chart into segments. This is a daily chart for Apple, so each of these various bars represents a day of trading. And if we zoom in, we can see that there is a certain pattern to it, and each bar has the same structure to it. I'll zoom all the way in. And as you can see here, you have a stick on both sides of a body. The top of the stick is the high of the day, or of this period, whatever that might be. The low is the lowest of this period. And since this is a green one, the open is the bottom of the bar, and the close is the top of the bar since this went up. The next period is a red one, so the open is here. The high of this period is here. The low of the period is down to here. And the close is down here, which is because it's a red bar. And again, you can tell because it's green that this was an up day. The open was at the bottom, a small lower than the opening low, and the high of the day was almost the close. So this is a very strong day, gives you a bit of confidence it's going forward. As you can see, the next day it opened lower and it went much lower, but it regained strength at some point and ended up closing near the high again. And again, another huge day. So with the candlesticks, you can make a pattern, and you can read that pattern to sort of make predictions. There's a whole Japanese science to this. The one thing that I think is the one chart that I really do believe in some ways, on a daily chart, mind you, these don't work nearly as well on shorter times, but if you're using a daily chart, there's a thing called a hammer, which you can actually see here, which has a gap down to open, and it doesn't matter if it's a green or blue or red bar, and it tends to have a long stick on the one end, and it has a gap, and then the next day there's a reverse gap, and this is not violated. It should never cross that line. And this is a very strong reversal pattern. As you can see, it's certainly held here because we went up and up and up and up. And this again is a smaller negative reversal, and again it held certainly for a period of days. One of the interesting things with the charts in general, and I use tick charts, not time charts, but all charts look the same. So this is a 100 tick chart, happens to be live, of Apple, and you can see it's essentially the same pattern. You know, if you were to make it into a longer one, which is say 500 ticks, again, there's aspects that are different, but as you pull back, they tend to consistently look the same. A 5-minute wouldn't look that different. But you end up with less information because each of these bars is now 5 whole minutes, where on what I use, a tick chart, each bar is, in this case on a 100 tick chart, each of these bars is 100 ticks, and a tick is a trade of 100 shares or more. So every time one of the trades come by that moves at 100 shares or more, you'll get a tick registered. And you can see here on the time and sales, which ones are 100. Let's stop and scroll. You can see that's a tick. None of these would be a tick because they're all under 100, but that's a tick, that's another tick, 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 tick. And it only counts those trades because any smaller than that, they don't count as a tick. And in the end, I find using tick charts to give much more information because you see many more of these internals to it where the time can pass slow or quickly on the bottom depending on how the volume is moving within the stocks. Anyway, the tick charts they look the same as a daily chart. They look the same as a minute chart. These are candlesticks, and in the end, what we're looking at is more to do with the pattern. You know, this is higher highs and higher lows for the most part, so this is considered an uptrend. You can see a line can be drawn using trend lines real quickly that establishes a trend. And you can see where we broke above the trend. This is, you know, more than we would expect, but it also came right back to the trend and bounced off it a few times. These things won't hold forever, but they do tend to hold for a while, and you can trade using some of these as a method of, you know, it's limiting your risks, and you have to sort of put a floor into it somewhere. You know, this little strong uptrend had, you know, where do you get out of it? Well, once it established the uptrend, once it broke it, there is where you get out of it. So this is basically a quick look at how you form your charts, and I think if you look, this is interesting. I don't even know what this will do. But if you switch to a minute chart, they should stay there. You can see that it's still accurate. You know, it's still very similar in so many ways. But it just comes down to, in some ways, preference. But for me, there's no comparison. You have to use tick charts. So that's the first one, candlestick patterns or candlesticks, and let's do some more.